So this is the euro dollar zoomed out basically, and if we look at what has happened, we can see that the currency has made one wave here, two here, and pretty much three here, and now is basically retracing. So last week we talked about a little bit of Fibonacci's, and let's zoom in a little bit. And we said that this point here would be the bottom. That would be what is called a wave A. This would be a wave B, and then we determined that wave C would be here, and that would be the top of the wave C, and may actually, after that, the currency may actually go back down, which it did go back down from here to here, but did not basically break that low here, did not touch it, and is now actually looking like it's going to go back up. So the things that can happen here is a bit tricky, because this is a corrective move, or it has the characteristic of a corrective move, and two things can happen. The currency, well, three things. The currency can go into a range pattern before breaking down, and could also go higher or lower. In any case, levels are pretty clear. We have this level here, and of course this level here. Some of them with a certain level of security into it. So if this correction is multiple wave correction, we also talked about that the correction could go all the way up to the 50% Fibonacci retracement from the move down, and this is pretty much where it is, or it is exactly where it is. Okay, so if the currency pass this level here, which we have identified as a C, here, this was A, and this was B, then actually if this breaks, this would become a wave D, which will go to normally what should be a last wave, which would be E, and we can determine actually the objective of wave E by doing price projections from wave A and wave C to wave D. And when there is override of those different projections, this is the area where the price would probably go. Right now it's pretty much this area here where the price could go in a wave up if the price breaks that level here. Okay, so if we look at it, the level that the price needs to break, well, I can put it a bit higher just to make sure, would be 2916. So we may want to take note of that, 12916. If it does that, quite possibly it will go to the 50% Fibonacci retracement, which is 300 pip. Last week we talked about possible retracement of 400 pip, and that's already basically 3/4 of that. Okay, and the level is 32.23, which, if you remember, we'll go back later into it, but it is also the weekly trend dragon trend line. Okay, that we talked about. So this is what could happen. First thing, if the price break upward, we know that the objective would be that level here. How would it go about it? We have to keep in mind that this zone here was a zone of support and resistance previously. If we also do a technical analysis, if there is a new zone here that is created, maybe the level of entry would actually increase, because let's say that we get a zone of support and resistance here that gets created, then we would have pretty much a head and shoulder, and then the level of entry would be not 2916, but maybe that level here, which would be at 2990. Okay, so there's about 80 pip difference here. That zone here is about 80 pip. So if it breaks that level here, there may be some congestions going on, and that would be either a sign that it's going to go back down and just following the range, or it could basically be the creation of a head and shoulder from that level of resistance here and the low that was created right here at 25, almost 25 figure. Okay, right now we cannot say that the currency is going back up. We can only say that right now the move up as corrective characteristic. That's why it's basically counter trend. Right now the trend is still up. When it goes up, let's say, and breaks up, if it does, then we can also apply the regular price action movement, because it will go up creating wave as well. Okay, and doing higher lows and higher highs, and then as it unfolds we'll be able to maybe adjust our strategy to this those chart configuration. The second thing that the currency can do is basically go into a range, okay, and play like that for a while, potentially a couple weeks, considering that this level here would be the level of support and resistance for that range. Usually it's at the middle, usually would be about here, which there is here a little bit, but it looks like in this situation where the chart tells us is that this is a strong level of support now, about 26 figure. If that level is broken, probably, and I would say better before the C level is broken. If that level is broken, then we would have this type of chart configuration, let's say. So we would have a second, that level broken here would confirm a second, a third lower high, and if it does break that level, very likely it will go down to 25 figure and potentially could break it. Okay, so on the short side, the entry that we would be looking at on the short side would be at that level here, which is 26, well, let's say 26 figure. On the short side would be a level to look at. The break of 26 figure, 1.26 figure, should brings you down to 125 figure and potentially break that level down. if it breaks the stop loss, though, in this case scenario would be either the previous high, which here would be around 27.30. So it will be a high capital exposure, well, about 100 pip plus, if you take that trade on the daily chart. If it does happen, then you can take a trade on the hourly chart or a lower time frame and time your trade better and reduce the capital exposure from there. Okay, so let's see if we can confirm that with Trend Dragon. And if we look at Trend Dragon, basically the entry that we would have would be here for the short side, and on the long side, to be safe, well, there are a couple entry possible. Here would be one, and here would be one on the daily. So we're looking at 26, well, same thing, 26 figure. And for the downside, to go, actually Trend Dragon has not much support after that, so it should go to, well, it'll go to 25 figure as well, which is about the same thing. Okay, now if you look at Trend Dragon entry, if you enter at 26 figure, then your stop loss is a bit more defined here on the daily chart. Well, it'll be still 28 figure, or you could go to the Trend Dragon trend line, which is 2760, or above 2760. There was a line here at 2791, so maybe 2770, 2775 as a protective stop loss from Trend Dragon. Of course, if it goes down, it would be nice. It takes maybe 1 or 2 days to do that, and then it will be we may have another line here that reduce the stop. In any case, I'll look at lower time frame as well and go from there. And also you can also notice that there is a build up on the upside a little bit, though compared to what happened in the downside, the upside seems to be a lot more sporadic and a lot harder to do. Now on the weekly, we said that the 50% retracement is at 132.23, and actually the Trend Dragon trend line on the weekly is at 132 figure. So 20 pip difference here, and we have also a line of resistance here at 32.29. So the Fibonacci retracement would actually tell us that if the currency breaks on the upside, and it's more evident on the weekly, actually if it breaks above 28, well, if it breaks the 29 figure level, then it should actually move back up to, it could potentially move back up to the Trend Dragon trend line at 132 figure, and also that would be the 50% retracement line, Fibonacci retracement line from the downturn. So if it did that, it still would mean that the currency could still be in a downtrend, depending on how it behaves from there. It could actually still go into a downtrend as long as it doesn't break the high, actually, in theory, but hopefully we won't see that. And if it does, then after that we have a range of about a couple thousand pip anyway. So never mind that, we'll see what happens when it does happen. That's it for the euro dollar. It's a big long, but I think it's a good analysis, and we may have a good plan for that. So let me know what you think. Talk to you later.